All right. Good morning, everybody. I'm glad to see we have a lot of participation today from all different types of governments, from Maine to Florida, out to Washington State, down to California. We have we have a lot of governments that are on there, and certainly friends of the firm, clients, non-clients, and so on. And so I'm glad to see this participation. Today's topic is getting going on GASB-84 Fiduciary Activities. Um, there has been a lot of information that's been out there since GASB-84 was released. However, a lot of folks are just now starting to focus on it and realizing that implementing GASB-84 is a little bit tricky in many, many respects. The GASB's been working on the project since 2013, and the release was a couple of years ago. But as we all know, we were working on other things like OPEB and pensions and so on. And just now we're really getting going and focusing on those changes. Um, Again, my name is Eric Berman. I'm a partner with Eide Bailey, and for the next few minutes, we're just going to be talking about those changes. And so again, the standard is Accounting and Financial Reporting for Fiduciary Activities. It was released, oh gosh, maybe about 18 months ago. And it's in the process of being codified as part of GASB Code Section 1300, which deals with funds. And the purpose of the next few moments is talking about some of the basics. We did another webinar a couple of months ago talking specifically about student activity funds. And if you need some further information on student activity funds, accounting, and financial reporting, certainly that's available on our website, or at the end of the session, I can answer, if we have some time, and I can answer a few of those questions. The issue with student activity funds is nearly every government, and it is different between the various levels of education, just very, very different, subject to different rules, procedures, laws, regulations, and so on. And so it's a little difficult to make blanket statements about every single student activity funds, but by and large, they may be changing. What we're dealing with in GASB 84 is an adjustment of standards that really, if you break it down, are not just 25 years old, and we're going on standards that are probably even older than that. They were really it came out of the original GAFR that came out in 1968. And I'll just tell you what's going on. So, in any case, some of the biggest changes are on this screen here. The definitions of a fiduciary fund are going to be updated upon implementation. One of the biggest changes we'll talk about today is agency fund reporting. And I used to be a preparer before I became an audit partner, and I was a deputy state controller. The agency fund reporting is probably the biggest change. Implementation for you December 31st governments that are out there, you should be in the process of implementing as of right now. For the June 30 governments out there, you should have started implementation a couple of weeks ago. But certainly implementation is going to take a lot longer than for some governments than just 1 year. And in fact, I was talking about agency funds when the internet went out, and agency funds are probably going to be the hardest place to implement because you have to do a beginning balance adjustment on those, and trying to derive what the beginning balance adjustment is going to entail a reconciliation. And in reconciling agency funds, it's not just, okay, what are my payables and receivables as of the point of implementation? It's what should the balances be? And as we all know, the former agency fund reporting was just assets and liabilities. And even then, being a former preparer, I know exactly what was done with agency funds. And in many cases, they were prepared on a cash basis that was assumed to be accrual. And so clearly there are those issues that are there. So next. So the first thing you got to do is derive what agency funds might be. And agency funds have a pretty difficult decision tree, not agency funds, excuse me, fiduciary activities have a pretty difficult decision tree. The first bucket you need to do is set aside fiduciary activities that may be component units. And so what we're talking about is pension plans, OPEB plans, external investment pools that are held in trust, uh, and things like in colleges, universities, certain general purpose governments like school districts and so on, foundations. For example, we deal a lot with library foundations and school foundations and so on, that just so happen to be component units. And so what we want to do when we implement GASB 84 is to hold those aside and realize that that indeed those are going to be in a separate bucket, because as we'll talk about in a few seconds, those component unit standards per se do not change. The second bucket that we're going to have are pensions and OPEB arrangements that are not component units. And by and large, these are single employer plans. And so what we're talking about is, okay, currently I'm standing in Arlington County, Virginia. And so if the county itself happens to have its own pension plan just for the county and its component units, that's probably a single employer plan, probably not a component unit unless somehow, some way it was set up that was legally separate and so on, had a separate board, and all the other various elements creating a component unit. And then the third bucket is going to be everything else. And these are your private purpose trusts in existing agency funds. And private purpose trusts, as we know, they are basically your cemetery trusts, or, trusts for perpetual care of a parkland or something like that. Those are usually private purpose trusts. And then everything else as of current GAAP is in agency funds. And as I talked about at the outset, over the first couple of minutes, agency funds are probably where a lot of the change is going to be. So this breeds about a 4-step decision tree. So the first step is there a component unit that is present that are pension and OPEB arrangements? And again, if the answer is yes, you set all those aside, because as you read GASB 84 and the implementation guide that was just released, those provisions do not change per se, unless there was a problem with recognizing a component unit previous to the issuance of GASB 84. And if you've had a problem recognizing a component unit, chances are you had that problem since the original component unit standards were put in back in the 1990s. So that's step number one. Step number two, again, is there a component unit present, but that may be an existing fiduciary activity, but not a pension or OPEB arrangement? And so the ones I see most commonly in practice of this one are an external investment pool, where the investments are held in trust. The pool itself is managed usually by a treasury entity or a third-party administrator. And the pool is for the benefit of other entities, usually, of course, governments that invest in the pool, and so on. So that's the second bucket. It is a fiduciary activity. It is a component unit, but it's not a post-employment benefit, pensions, OPEB arrangement. That's the second bucket. So third bucket, are there OPEB arrangements or pension arrangements that are not component units, and it may be right now in an agency fund if it doesn't have a trust, or if it does have a trust, maybe it's in a pension fund or an OPEB fund that is a fiduciary activity, but usually it's a single employer plan. And as I mentioned, I'm currently in Virginia. It is that particular county's pension or OPEB plan. And then the fourth bucket is everything else, private purpose trusts, agency funds, and so on. And some of these may be fiduciary activities when we all get done implementing GASB-84, and others may not. So let's go to the next slide. This breeds, again, a decision tree, and I try to make this decision tree as easy as possible. And this is something that I worked with GASB on and try to make it clear. And I know that GASB shows this in various presentations, and I'm gonna clarify some of the decisions for you as we go on over the next couple minutes. So again, first question, are the assets held by a component unit? And for those of you with printed copies or maybe able to take a pencil and draw on a screen, the word assets is probably the most important question that you may want to circle. And because if you don't have any assets, you really don't have a fiduciary activity because there's nothing there to control. Now, granted, there might be a pass-through that is there that we'll talk about in a couple of minutes when we talk about custodial funds and so on. But first things first, you got to have some form of assets, even if it's only just for a minute, because in a pass-through fund, say, you're withholding funds on behalf of some other entity or passing through grant funds, you got to have assets just for a second, even though you're passing it through. So that's either a yes or no answer. And then second, are the assets held for pensions or OPEB arrangements? And that breeds four potential possibilities. So let's go to the next slide. So first question, true or false? Can pension and OPEB arrangements that are component units be fiduciary activities? Excellent. Well, the answer is yes. Pension and OPEB arrangements that are component units are by definition fiduciary activities. That's one of the earlier paragraphs in GASB-84. I think it's paragraph 6 in GASB-84. There might be pension and OPEB arrangements that are not component units, but if you've decided in previous standards that indeed this component unit that is fiduciary in nature is a pension and OPEB arrangement, it is a fiduciary activity, and those standards do not change. There are those four keys. And so first, as I mentioned previously, is there a component unit that is providing OPEB benefits or pension benefits? And the most common example that we run into in practice is statewide PERS plans. And those are usually component units of states. And occasionally, of course, you get counties that happen to have their own public employee retirement system, and certainly cities that have their own public employee retirement system, but those are slightly different. The counties may have other entities that are in them, and that's sort of step number one. And then step number two is there's some form of component unit that does not provide post-employment benefits, but is fiduciary. And as I mentioned here, a very, very common example is a foundation at an institution of higher education. And we see that a lot in practice. And of course, those of you who are in colleges and universities, that those are very important. So there are four different scenarios as a result. So again, component units that are fiduciary have four different potential paths. They're either a pension or OPEB plan. And again, you gotta have assets. So again, those of you who are have printed copies, circle that word assets. And those assets have to be derived from entities that are not part of the reporting entity, but they're accumulated for pensions or OPEB. Or the assets are administered through a trust, Actually, no, and, excuse me, not or, and the assets are administered through a trust in which the government itself is not a beneficiary. So it's not just where your legislative body is moving funds into into a pension trust in order to take them out. Because once funds are in a pension trust, they're held there for the beneficiaries because they have to be dedicated to providing benefits, and they're legally protected from the creditors of the government. And by withdrawing funds back into your general fund, that could be problematic for tax purposes, as well as obviously for legal purposes. So the assets really have to be dedicated. Or those assets are for the benefit of individuals, or the assets are not derived from providing goods or services to those individuals, and the government does not have administrative involvement or direct financial involvement. That last bullet in the middle there, the administrative involvement and direct financial involvement aspects are extraordinarily important. And again, if you have a printed copy, you may want to circle those as well. We'll get back to those in a few minutes. Or the assets are for the benefit of organizations and governments that are not part of the reporting entity, and those assets are not derived from providing goods or services to them. And that's where you get into the external investment pool aspect. Because if you think about it, those assets are for the benefit of the entities that invest in the external investment pool. And there's no real goods or services that are provided other than the administration of those funds, which if you're a treasury person or some other fiduciary or third party administrator, they're held in trust to actually do that investment. So the third part possibility, are there post-employment benefits that are not component units? And again, here we're talking about an irrevocable trust for, in this case, a county or a city or something like that. And then there's a fourth possibility that's there. Oh, come on. Why is the screen going crazy? I apologize, everybody. We're just having some technical difficulties today. Or there's a fourth possibility. Do we have some form of endowment or, conservation trust and so on? So, all right. So let's talk about those pension and OPEB arrangements that are not component units. And so we have to have some form of trust that's there, or if there isn't a trust, there's some form of assets that are accumulated. And we see this occasionally where are these side funds that are set up in fiduciary funds that accumulate assets essentially to pay for future pension and OPEB contributions. Now, until those funds are actually held in the trust that is providing pensions and OPEB, and it's an irrevocable contribution, those funds are under current GAAP, until you implement GASB-84, are in an agency fund. Well, when you implement GASB-84, it's just assets that are accumulated for future contributions. Now, if you are holding them from other entities outside your reporting entity, well, then you got to go through whether or not you are a fiduciary, and you may or may not be a fiduciary. But the bottom line is you have to have the stuff on the left side of your screen and on the right. You have to have control of those assets. And if you don't have control of those assets, then those assets are back at the originating government and they're not part of your reporting entity, but you got to have control. You have to hold the assets, meaning you have to have custody of those assets, and or you have the ability to direct the use, exchange, or employment of those assets that benefits the specified or intended beneficiaries. And where that comes into play is talking about defined contribution type of arrangements like 403B plans, 457 plans, potentially other arrangements like 529 plans is do you have or able trusts as well? I forgot about that. You could have situations where you don't have control of those assets, in which case it'll be a slightly different scenario. And then let's go down to the next slide. So what do you got left? So, and it keeps jumping. What do you got left? Well, you got all the other bucketed scenarios that are there. You got meeting the criteria 2, and we can refer back to criteria 2, but I don't want the system to blow up anyway. But you got to have some form of fiduciary arrangement, and your government controls the assets, and the assets are not derived solely from any of these transactions. Now, the word solely becomes important because that's the only flow of revenues to derive assets. And the most important one would be, do you have your own source revenues in there? Because if you have your own source revenues, that's not a fiduciary activity. And we'll talk about own source revenues in a minute, but that's not a fiduciary activity. The second piece that's going to be important is for those of you who deal with grants, and I know that's a lot of you on the call. And grant activity, in some cases, is fiduciary activity, but only where there's no administrative or direct financial involvement. And that's truly a pass-through arrangement, but that's going to be very, very rare, where the funds are just received from you and then immediately passed through without any form of subrecipient monitoring, any form of eligibility determination, any form of withholding of funds just in case there's a problem, and so on. So that's going to be a pretty rare circumstance. The circumstance that would be a fiduciary activity in this scenario 4 would be a situation, say, for example, you have a county that is collecting taxes and is the assessor and so on, but a portion of those taxes gets remitted to the municipalities within the county. And if that's the case, that process of collecting and remitting to those municipalities, that's a pass-through situation. And in that case, that could be a fiduciary activity. Notice that I'm saying could, might, should. There's a lot of modifiers in what I'm saying. And the reason is every situation is different. And so we have to think about this. So let's go to the next slide. And Amy, I'm not going to touch my screen. I'm just going to let you drive the truck here. So here's an alternative way to decide the fiduciary activities. We pretty much beat this one to death, but what I tried to do is make it a little bit easier for you. Amy, let's go to the next slide here. Now, here's what GASB indicates as the decision tree. I challenge you to try to follow this. Certainly, there's a lot of small print on your screen if you're looking at this on an iPad, or maybe you're looking at it on a bigger screen. But even so, the writing is very, very small. It is in the back of the printed copy of GASB-84. If you're looking at it online, it might not be so easy to read. But look at some of the first questions here. In the upper left-hand corner are the assets held by a legally separate entity that meets the definition of a component unit as defined in GASB 14 as amended. And if the answer is yes, you go down. If the answer is no, then you're at, does the government control the assets? And if the answer is no, then the activity is not reported. And that could be a pretty different scenario. And then once you get past that first chart, then there are all these other decisions that are there. And so hopefully in your mind's eye by now, you're realizing, well, wait a second, this is not as easy as, gee, we got to implement this brand new GASB standard 2 weeks before the auditors show up. No, this is a little bit harder. So let's go to the next slide, because guess what? The decision tree keeps going. And there could be a possibility where certain elements and certain transactions that you currently call fiduciary activities could land up in governmental activities or could land up in business type activities. And that's all the way over there on the right. And so that's part of the things that a lot of our clients and non-clients are starting to realize as they implement GASB-84 is, oh geez, a bunch of these could land up as government or business type activities. I talked with a colleague of mine at another firm yesterday who said that this was the biggest issue he was running into in the Southwest. And sure enough, it is a fairly large deal. So let's go down to the next slide. So I mentioned component units and component units that are fiduciary in nature. Um, this is a good time to actually kick the tires on those component units that currently are being reported by your government that is fiduciary in nature. Maybe pull out those old dusty manila folders that you haven't looked at since the 1990s and just take a look and make sure that the law or the trust agreement hasn't changed since then, and go through the decision tree of whether or not the activity is actually still a component unit. And on this screen are the various aspects of whether or not a component unit is present, just to have as a reminder for you. For example, it has to be legally separate, and to have a component unit, the voting majority has to be held by the primary government. You have to have some form of imposition of will. You have to have some form of benefit or burden. And of course, the primary government can always make a determination that it's misleading to exclude the potential component unit. And as such, document any changes and tell the auditors and your audit team as soon as possible if you do need to make that change, simply because that's a change in reporting entity, and we gotta note it as part of our auditor's report. And oh, by the way, that's a beginning balance adjustment. Let's go to the next slide. So hopefully by now you're saying to yourself, gee, I gotta formulate some questions that need to be answered. And the first question is, are there assets? And if there are no assets, there are no activities, there are no fiduciary activities. Do not pass go, do not collect $200, stop. You gotta have assets. Second, is there some form of a trust or equivalent arrangement in place? And to have a trust, it's the same scenarios as having a pension or OPEB. And remember those three elements: it has to be irrevocable, the trust has to be in place to pay for benefits or intended beneficiaries, including in an external investment pool where you're paying back your investors, and of course it can't be attached in the form of bankruptcy. Next piece is there some form of control. And remember, you have to have either physical custody of the assets, or you've signed a contract to deal with a third-party administrator. But built into that control is the ability to use, exchange, or employ those assets. And then the fourth big question is there administrative or direct financial involvement? We'll talk about those in a few seconds. But these are your key questions. So true or false? Fiduciary component units are likely not to change due to the implementation of GASB-84. I would say true on this one. They're probably not going to change. And let's just go quickly back through. The only reason why they will change is if somehow, some way, you made a decision back when you were implementing the component unit standards that failed to recognize a fiduciary component unit, or you recognized a fiduciary component unit and it probably shouldn't have been. And indeed, it could go either way. So I'll give props on either of those. But it could go either way. It's a good idea to check while we're implementing GASB-84. So Let's dig a little deeper. The activity could land up being fiduciary if you have all three of these elements here. Again, we got to have some form of control. And remember, a couple of slides back, we said, okay, if you have control, you have to figure out whether or not the assets are not derived solely from these own source revenues. And this is a hard concept to understand because it's a double negative. And it's unfortunate that this is embedded in GASB 84. They couldn't say it clearer, but this is the language that is straight out of paragraph 11 in GASB 84. So the most common example of own source revenues, again, you have your legislative body that parks, say, a surplus from the prior fiscal year into what they call a trust for future appropriation. That happened to me all the time when I was a deputy controller, where my legislature said, there shall be a trust for future appropriations. Well, that's not a fiduciary activity under GASB 84. It just isn't. And so the second potential could be are from these government mandated involuntary non-exchange transactions. And the most common transactions of those have to do with grants and taxation. However, again, you have these double negatives. So the assets are not derived solely from government mandated or involuntary non-exchange transactions that are not passed through grants. And so there's another decision tree here for which the government does not have administrative or direct financial involvement. And again, as I said a couple of minutes before the previous polling question, the most common example that will probably land up being a custodial activity, not an agency fund activity, custodial activity is where government collects taxation and then remits to other municipalities, in this case, school districts in your jurisdiction. That'll be the most common, that'll still remain a fiduciary activity. Let's go to the next slide, Amy. So I mentioned these words, administrative and direct financial involvement. And for those of you with student activity funds, this is your break point. Because if you do have administrative or direct financial involvement, those are not fiduciary activities. And so I'm going to wait for you to breathe, but there could be some changes on your student activity funds. Those could end up being governmental activities and governmental funds. Unlikely that they're proprietary or enterprise activities, but they're certainly not fiduciary. So, what is administrative involvement? The most common aspect of administrative involvement is some in the world of federal grants, some form of subrecipient monitoring. You're monitoring for whether or not it's allowable costs. You're monitoring for compliance. You're actually held responsible by your granting agency, and certainly Eide Bailey provides a lot of thought leadership on subrecipient monitoring and single audit. And so you can certainly look there in terms of further definitions of monitoring compliance. The second piece is determining eligible expenditures. Now, I put down subrecipient monitoring and subrecipient relationship, but there's a third aspect there, having the ability to exercise discretion in how assets are allocated or spent. And for student activity funds, if you have a teacher that can say, no, you can't buy those things with the student activity funds, or you have some form of policy or procedure that has to be implemented by a school employee or another educational employee, or you're following a statewide guidance, that could be administrative involvement. If all you are is just a rubber stamp and you have no authority to say no, and you're just signing checks and so on, well, first and foremost, I'd say you have an internal controls issue, but especially if you have control over those assets. But it has to be more than that rubber stamp to get to administrative involvement. Direct financial involvement is also very common. And for those of you in the federal grant world, you know that there are a bunch of grants out there where there's matching and level of effort. And if you have this sort of matching that is there, that is very common where you're providing dollars for dollars. So what does this all mean? If you do have this administrative involvement or direct financial involvement, this could result in a governmental fund or activity. So I know there are folks out there on the webinar that are probably in the midst of hyperventilating on this one. You're probably doing a little, oh my gosh, this is a big deal. It is a big deal. Now, the question is, these are common questions that we've received so far from governments that have started the process of implementing GASB-84. Does that mean my government has to change the system? No. It doesn't mean that you have to change your ERP system, change QuickBooks, things like that. It does not mean that you have to do that. This is just for financial reporting purposes. However, you may want to consider that in the future, depending on your level of effort to convert from your current agency fund activity to a governmental fund activity. Does that mean you have to budget for student activity funds? Well, that's up to your laws and regulations. That's not up to GASB itself. GASB has nothing to do with laws and regulations. It only has to deal with financial reporting. And since it only has to deal with financial reporting, you know, that's a fairly big deal. By moving from an agency fund to a governmental fund, is there a beginning balance adjustment? Absolutely. I mentioned this at the outset. It absolutely does mean that you got a beginning balance adjustment, which could require reconciliation. Now, what if my government matches funds into a 457 plan? Well, there's an exposure draft that's out there that GASB recently released. I urge you to take a look at it. It is specific for 457 plans, but if the 457 plan meets the definition of a pension plan, I did not say defined benefit or defined contribution, but if it does meet the definition of a 457 plan, then it's reported just like a pension plan in accordance with 84. Let's go to the next slide. So this sums up what does this mean by revenues and own source revenues, and this is a common flow of funds. And so if you don't understand what own source revenues are, or maybe you have a decision maker that doesn't understand what own source revenues are, fold this page back or bookmark it. Let's go to the next one. So what is this thing on control? The first aspect of control is holding physical custody, or you've engaged a third-party administrator, such as a bank, to actually administer the funds for you. But if you physically hold a checkbook, or if you have a employee that is in charge of reconciling that checkbook, or maybe has signatory authority over that checkbook and can say no, that is control. It doesn't matter if you've appointed a designee, because by virtue of that contract, you have control of those assets. Let's go to the next one, Amy. So here's some example of control. A first example is, let's say there is a not-for-profit cemetery that is in your jurisdiction, and that not-for-profit does not have any administrative staff and says to your municipality, hey, can you administer the local cemetery for us? And the treasurer says yes, signs an agreement to administer the funds and provide the accounting and financial reporting. You know, by the way, there's a fee that's charged. And so the remittances for the not-for-profit and pass through to the not-for-profit, that is control. Now, the fees that are actually earned to administer those funds could land up being governmental. However, the amounts that are used to pay for the perpetual care of graves and so on, well, that's fiduciary. Inmate canteen accounts. Well, obviously the inmates don't control their own funds. They're held in trust for those inmates, but but the administration of them is under the control, obviously by the local government, the jail administrator. And then I mentioned a couple of times whenever you have a teacher or a school board, a school administrator that is holding the checkbooks for clubs and alumni associations. If indeed the checkbook is held by a government employee, that is a control. Let's go to the next one, Amy. So uh, I put a couple of other examples. These are from the implementation guide. There's an example in there of an able trust, and these are fairly new. And the fact pattern are in the lighter bullets there, and indeed in that fact pattern, the state is in control. I did mention whenever a government is in custody of resources held for not-for-profit, that is not a component unit. You got an agreement for say, accounting and financial reporting. Indeed, there is some control. And then let's say we got a foundation that's not a component unit, and the scholarships are selected by a non-university employee. The contributions are from members and so on. But if the funds are held by the university is in control. Now, if the foundation holds the funds, university is not in control. And so clearly that's a decision point there. Let's go to the next slide, Amy. Well, here's not control. So I mentioned about defined benefit plans that is not a component unit at any of the governments. If it happens to be a multiple employer plan, well, guess what? There's no control there. So the question is, where are those assets reported? And they're reported by the government that has held the accumulated assets. Retainage, performance bonds, those are really payables, especially for capital projects funds and so on. TSPs, tuition savings plan, where government's not a trustee. These are usually prepaid 529 plans. That is not control, especially in a case where a state is not a trustee, it's not a component unit, it's a separate board. You have an assets held by a third-party administrator. That's not in control, and it's simply because of the prepaid nature that's there. It's almost like defeased debt. And then an alumni club or a PTA, legally separate from the boards of the school district. They don't even hold a checkbook, and this should provide a little bit of relief to many school districts that are on the line. If you got a PTA, or alumni club, chances are you're not in control, and that's not a fiduciary activity. Let's go to the next one. So here's one that should also give you a pause as well. There is a question in the implementation guide, and if you do have a printed copy of the implementation guide, you may want to dog-ear this one. And so the vast majority of agency fund transactions that I used to deal with, billions of dollars for a state on an annual basis in and out, had to do with withholding for payroll, taxes, wage garnishments, and so on. Actually, even for revenues and normal spending. That activity went through agency funds. Well, under GASB-84, those are really liabilities and potentially assets of the government. For inflows, they'd be assets, they'd be receivables. But a good chunk of this activity is outflows, and those are liabilities of the government. So that needs to be reclassed as of the beginning balance. Just as a suggestion, again, the reclassification is going to have to be done to payables. I urge you to start this process as soon as you can, because those of you who are December 31st governments, you're going to have to do that as of January 1st of this year. Don't change your systems. Don't go to your legislative body and say, hey, we got to do another warrant process. We got to totally change that around. No, this is just for financial reporting purposes. Don't do that as of yet unless you find it to be overly burdensome, like this internet connection here. I put down how I would reconcile it. This may not be perfect, but certainly utilize this. Let's go to the next one. So there is an exception to this process. If you happen to be a enterprise fund, and the enterprise fund is holding assets that are more than 3 months. If they're more than 3 months, then you can use what's called a custodial fund. If they're less than 3 months, then yes, they are payables, and they do show up in your statement of net position as an accounts payable and as an expense. Let's go to the next slide. So let's go to this polling question.
All right, the polling question here, go ahead and pick between one of the options. Although the government has control of the assets because it has custody of the cash withheld, the unremitted amounts in the clearing are part of what of the government? Majority of you got it right with liability.
Excellent. All right, let's keep going. So, I hope you're surmising that probably the biggest changes will probably be in custodial funds, and those are again a new type of fund, that'll be the biggest change in reporting. And the majority of your current agency fund activity may end up going over to governmental or proprietary activities in certain circumstances. So you can't just take your agency funds and automatically assume they're going to be custodial funds. No, no, no. You gotta analyze each and every one of those flows, because again, they could end up being governmental or proprietary activities. Let's go to the next slide. There could be some changes with 457 plans, 403 plans, 529 plans. But by and large, if they're already fiduciary component units, chances are there's probably not going to be a change in that. But as I mentioned prior to some of the technical issues that we had going on here, you know, it's a good idea for you to really examine whether or not those relationships were set up at the get-go properly. So let's go to the next one. So here's what it says in the exposure draft. Again, it is specific for 457 plans. There's nothing in there on 403 plans. And I know there are a couple of folks from PERS on the webinar. I hope you're still on the line. From various PERSs around the country, and some of you do have 457 plans. Well, you should take a look at this exposure draft. And so the question is, does that 457 plan meet the definition of a pension plan? And there's a definition that is built into GASB statement number 67 as to whether or not it is a plan that is set up to provide benefits to eligible beneficiaries. And I'm paraphrasing that, of course. You should take a look at that. That's in paragraph 51. I did put in a summarized bullet, which is in the center of your screen. That is a definition of a pension plan. And so if the answer is yes, apply all the applicable pension plan accounting and financial reporting guidance. And that includes reporting as a pension trust fund. That would be a fiduciary fund in accordance with GASB-84. So another aspect that would connotate whether or not you have a pension plan is whether or not you have matching funds. And a bunch of governments that we deal with across the country actually match employee contributions into a 457 plan. If the answer is yeah, well, that's a definite pension plan that's there. So this is not final as of yet. And so you do have the opportunity to comment. Comments are due in about a month and a half, or actually 2 months. And so think about it. And the implementation would be in for calendar year 21. And so think about it. It could result in a change. Let's go to the next one. So As I mentioned, not much stuff is going to end up changing other than the custodial funds. The custodial fund reporting is going to look just like any other fiduciary fund. So all this old agency fund reporting that we've been dealing with since the 1960s, actually, that all goes away. And that is a very, very significant change. For audit purposes, it may change a few things. Certainly the beginning balance adjustment, it may change a few things. But let's take a look at the statements themselves. Let's go to the next slide. So again, uh, the elements that will be within the custodial funds are going to be all these sort of fiduciary activities that aren't held in trust. There's a very, very rare circumstance that you're going to have an external investment pool that is not held in trust, but you're going to end up with a statement of fiduciary net position and a statement of changes just like other fiduciary funds. Let's go to the next slide. There is a slight change in the statement of net position, fiduciary net position. It is in the recognition of a liability. The recognition, a liability will be recognized upon presentment. And I put in a couple of examples here, but let's say, for example, you have somebody who retires out of your organization, files their papers, is eligible to receive a pension. The moment that they file their papers and it's determined by your board to be an eligible beneficiary, well, that's a liability. Does that mean that the new retiree, the entirety of their pension liability is on your statements? No, because you don't know how long that person will live. It's an actuarial determination, and it's an estimate. So you only present what is due to them in the next cycle of payments. So clearly that's going to be a potential change. Let's go to the next slide. Here's what the statements are going to look like. Very, very much like your current financial statements, your statement of fiduciary net position, except for the column on the right. Let's go to the next slide. So here is the change statement. If for those of you who are going to be implementing custodial funds, look on the right side and notice the level of aggregation. In this particular case, we got taxation coming in that is collected on behalf of other governments. And so you see the inflow and the outflow, and you see a little bit of an administrative fee going on there. And that administrative expense does show up on the right-hand side. That's that $293. And then you have some miscellaneous. That's probably some investment revenue that's showing up that needs to be remitted somehow, some way, and maybe pays for administrative costs. But it does close down to the net increase or decrease in fiduciary net position, and the change in what's below your screen is the change in fiduciary net position. Let's go to the next slide. So our final polling question.
The final polling question is now open. Go ahead and answer that true or false. And 83% was true.
Excellent. Yes, you can present them aggregated. So how do you implement get started? And I understand you're trying to get an audit out and so on, but get started. Especially if you happen to have a lot of these fiduciary activities that need analyzing, get a team together. And then have a printed copy of 84. I'm old school. I like printed copies. Potentially have the implementation guide. Those are freely available for you on GASB's website. Just print them out. Dog ear, circle, red flag, whatever you need. And then have the team take a look at all of your existing fiduciary activities, compare them to your laws, regulations, because there could be some judgment calls, especially on whether or not you have administrative involvement, whether or not you have control. You may need to pull contracts, especially in the case of donations. And then again, I'm sort of old school. If you have to put together manila folders with all this information, do it. And if you do have to put together a checklist, do it. And I know that some folks are trying to use spreadsheets and so on, and that's fine. Are they perfect? No. But indeed, document any sort of changes that you do need to make. And if you put together a form, you want to show it to us, by all means do so. All right, let's go to the next one. So, uh, if you do end up having a reclassification from fiduciary to governmental funds, please tell us. If we're your auditors, please tell us as soon as you can, because that could be a material change. It could change your materiality in some way, shape, or form in a governmental fund, especially if you declare a payable that you didn't normally have before. You may need to have a reclassification. Certainly, if you've misclassified a fiduciary fund prior and it should have been from a different type of fiduciary fund, and you normally classified it as a private purpose and it should have been a pension fund, well, guess what? You have to tell us about that as well. Consider your policies and procedures on how funds are created and managed. Again, this is a good time to kick the tires on component units, trusts, things like that, as to how those things are managed and try to get to some form of consistency. And then, as I mentioned, download a copy of the implementation guide from GASB's website, www.gasb.org. It's freely available, print it out, and that'll help you implement as well. Let's go to the next slide. There are 52 questions and answers that are there. They will result in a new Chapter 11 in the Comprehensive Implementation Guide because GASB wanted to separate it out from the other pieces of the implementation guide that's now larger than most old-style telephone books. The various focus areas in the implementation guide are here on your screen. Let's go to the next slide. So with that, are there questions, Amy?
There are quite a few. Do you want to answer them privately offline because I can get you a copy, or do you want to go ahead and answer them
now? Let's take one or two because I know we're in overtime here.
Sounds good. So here's a smaller question. Where do we get the categories presented in the statement of changes in fiduciary net position?
Good question. Those categories are going to be based on your operations. The additions and deductions for most fiduciary activities will not change. You're going to have your additions are going to be your investment flows, and notice that investment income is netted by investment cost. For some reason, GASB didn't say investment expense, it's investment cost. And those are going to be in additions as well as contributions and so on. The deductions are going to be benefit payments and so on. But for custodial funds, they're going to be based on those flows that are custodial in nature. And so those flows could be taxes, they could be pass-through grants where you don't have any administrative involvement or direct financial involvement. And again, those would be rare. What's another question, Amy?
Okay, this is the last of the smaller ones. I have activity funds for which we hold custody, and we choose the vendors we pay with these funds, but we do not choose when to start using these funds. I believe these classify as custodial funds. Is that correct?
That's an interesting question. If you choose the vendor, you probably have some form of administrative involvement. If you have nothing to do with determining an eligible expenditure, or approving an expenditure, or maybe you're just signing off on a check, well, that might not be administrative involvement. I'd say email me separately with some more facts on that one before I make any form of determination. I may actually have to reach out to GASB on that one. And so here's my contact information, my phone number, my email address. What I'm going to do is take the folks' questions, answer them, feed them back to Amy, and then to the participants, maybe we can post the answers to those questions.
Sounds good.
I thank you all for participating today, and if you do happen to have any questions, please feel free to contact me.
Awesome. Thank you all so much, and everyone have a great weekend.